Hello? Hello? Yeah, okay. Uh, Good day to everyone. Okay, today we are coming back again into this trade live with Precise Trader. And today we'll be trading on news, okay, live news. Okay, this is a new service which we have started, and I'm sure it will be going. It will be very exciting, as we go on, and of course, as we trade with the news, because there is not many people in the industry doing it. But of course, I wouldn't say it's risky, but it's a probability trade setup. And what we are going to do is, of course, we will be telling you how to look, how to anticipate, if the data is good, then what would happen. If the data is bad, what is to be expected, then how we can trade during the news. Okay. Okay, do take note of the risk disclosure. And day trading in foreign exchange is risky. Past results are not indicative of future returns. The content on this webinar is mainly educational purpose, and your use of information is entirely at your own risk, and you must assess the risk at any trade before you put in a trade. And also do take note of the ground rules. Respect fellow attendees and the presenter. Mute your mic when the presenter is speaking. Use the chat feature to ask questions, and also please indicate when you chat, okay, please address to everyone, okay, please not uh, uh, direct to a personal one, and so everyone can see your questions, and also ask questions related to trading. And for those of you who are watching from YouTube, okay, my sincere apologies, because you would not be able to ask questions. And if you are really want to be interactive into this room, and if you want to continue traveling with us, I suggest you register, give us your information, so that you will be getting some added services together with it. You can also benefit. Okay, why Precise Trader? We have a 30 years of experience in the industry, and especially being 30 years in this industry is not that easy, because there is a lot of ups and downs we have seen, and we are still surviving, and we do have a specific trading system whereby, the system will tell you how we can do's and don'ts and go about. And our system is very unique. Okay, this can decide the trade without looking at the chart. So of course, I'll be showing you how it's done day in, day out, and how we get ourselves prepared before the data is out. That means, like for instance, like today, we are going to trade for the news. I mean, trade on the news. So I'm going to prepare yourself, okay? And what is going to happen if the data is good, how the market would respond. If the data is bad, how would it respond? And we can get our answers as we go on. And together with the market, we would be traveling. Okay, zone price alerts. This is this is a system which we have in our is a service which we provide on our system, whereby it gives you an opportunity. Okay, basically it tells you when to trade, and it doesn't tell you whether to buy or sell, but it just tells you that, okay, price is reaching this level. Okay, get yourself prepared. You do something, and that is the alert called zone price alerts. And we have a dashboard. Okay, this is the most powerful system, most powerful tool in our system, whereby it gives you an entry, exit, stop loss. Okay, just by looking at it, we don't have to look. Of course, we can tally it with the chart, especially if you are trading, and if you have experience, you can do that. Trend map. Okay, this is also another tool which we use. Okay, this whereby within minutes you can identify the trend on different time frames. And we also have a PT zones that would also give you a bird's eye view of all the markets on different time frames. So now today I'm going to show you, we are going to trade live, we're going to trade together. But for those of you who really want to try our system, okay, what I would suggest is probably you do it on a demo account, and try test the system. If you feel you're comfortable, you're happy, then you can do it on your live account. Or if you're going on live, okay, please take proper necessary precautions. Okay, we don't want you to lose money unnecessarily. Okay, then there's another tool we use in our system. We call the strongest and weakest, and this will decide on the best cross to trade. And we also provide live signals, okay, every day. And this is, we have like 5 types of signals. They call scalping, day, news, momentum, and swing. Scalping is mainly for short-term traders. Day trading is for day traders. News is for those people who wants to be on the news, who doesn't have time to monitor the whole day in the market, but you only have specific time. That means you just make a quality work on your trading system. Momentum is as and when the market moves, then you do a momentum. And swing is for those people who really have no time. You only have like once a week, then you can follow the swing trading. And we also provide a strong back-end support, and you can take this as a career, meaning we will be giving you a proper guidance, then you take this as a career. The products offered, okay, we offer euro, dollar, pound, dollar, yen, Swiss, Aussie, Canadian, New Zealand, Sing dollars, and any one of these crosses against each other. So that means if you have any trades, or if you are trading on the crosses, like for instance, like Euro New Zealand or pound yen, anything you can ask, we would be there to give our view and give our support. And we also trade on precious metals like gold and silver. And we do trade on futures like mini Dow, NASDAQ, mini S&P, Russell, DAX or CFDs, and of course the commodities like crude oil, natural gas, corn, wheat, and you name it. I mean, we all in all we concentrate about 70 to 80 instruments. Okay, our system does support these services to all these products. Okay, now we are going into live trading. Okay, we have another half an hour, okay, about to be 38 minutes to be more precise, and the data is going to be out. Okay, what I'm going to do is I'm going to give a call, and at the same time I'm going to guide you along, and I'm going to tell you, okay, look, this is, if the data is good, how the market is going to respond. If the data is bad, how is going to be respond. I mean, how we are going to respond, and how we are going to manage our trade as we go on. Okay, let me change my screen. Then, okay, let me tell you what is to be expected and how we can move forward, right? Okay, now, this uh, usually the tools we use is Forex Factory or investing.com. Okay, this is where they would give you the data, what data is out, and what is the forecast, and what was the actual data out. So we have another 37 minutes, and PPI is a very important data. This is related to inflation, and yesterday CPI came out bad, which we anticipated to be bad, and we did take a trade anticipating the dollar weakness, which we were right. Okay, now today PPI, last the previous month the PPI was bad. Okay, now today chances are the PPI may be good or it may be bad. Okay, most what we are, because we have to stick to one direction. Okay, because we cannot be saying which this or that, but we have to stick to one direction. And being a trader, I think this is the decision you have to make, and of course it's a calculated risk which we have to do. Then 10 o'clock we have a prelim consumer sentiment. So what we are expecting is, okay, if the data is bad, okay, we expect the dollar weakness to continue from yesterday, and we expect the high or low to break if the data is bad. Okay, and if the data is good, okay, let's say, okay, now the core PPI is 0.2, and PPI is 0.1. So let's assume, okay, the core PPI came out to be like 0.3 or 0.4, or PPI to be 0.2 or higher. Then what will happen is the market would digest that news. That means we may get a spike on the opposite direction. Okay, then the market may be in a range trading uh, with the low, whatever you see after the news, and within the yesterday's high. Okay, then the third thing can happen is the market may not respond to this data, and the market may respond after the 10 o'clock data is out, which is a prelim consumer sentiment. Okay, if that data is bad, then you may see the dollar weakness. Okay, so overall, what we are expecting or what we are anticipating is we expect the dollar weakness. Okay, when I say dollar weakness, that means we expect the euro dollar to go up. We expect the pound to go up. We expect the dollar yen to come down, Swiss to go up, and we expect the gold to go up. So this is what we expect, and we are anticipating the data to be weak. But on the other hand, if we got to mentally, and also when we put in the trade, we got to get ourselves prepared for both aspects. Okay, meaning in the event, if the data is good, okay, how are we going to trade, and how do we expect the market to respond based on the when the data is good. Okay, this is what we are going to tell you. We give you an answer, then we are going to put in the trade, and I'm going to show you how the trade decisions are taken and how the trade are managed after the data is out. So I'll be going to guide you along the do's and don'ts, and how we are going to do it, and how we are going to end the day with a profitable note. Okay, let's start the work. Okay, now we begin the day. Okay, we begin the day by looking at what is the data announcement and what is to be expected. And next, we see what is the current trend. Okay, what is the current trend, and how is the market going to respond to this trend. Okay, so now we use three tools. Okay, early on I did tell you that we are using three tools, mainly the dashboard, trend map, and the PT zones, Forex, and finally the chart, to really evaluate, to see how to go about. So now we look at the trend map. Okay, this trend map gives you a bird's eye view of what is happening on the market on a different crosses with the different time frames mentioned on the top. So here we have all the currencies, and on the top we have all the time frames. So when you look at euro dollar, for instance, okay, euro dollar is flat. Okay, the signals are very straight and very simple. When it's white, that means the market is flat. Green, that means it's up. Red, it means market is down. Okay, so you look at the time frame. So if you look at today being the last trading day of the week, today being Friday, so we look at the weekly and the daily. Of course, we don't need the monthly and quarterly, but if it gives you an answer, take it. So if you look at it like euro dollar, monthly is flat, quarterly is flat, weekly is up. Okay, weekly is up. Okay, what does it mean? When it's up, means the market is trading above the previous week high. And daily is flat, 720 is flat, 360 is flat and all. But overall, I see a green all across the board on different time frame. That means I have to be a buyer. Okay. So the first clue I get is I am going to be a buyer on the euro dollar. And of course, I'm going to give you an answer when to buy, when to put a stop loss, or where to put your stop loss, and where to put your TP. I'll be giving you the answer for all this. So we would be trading live together with you, meaning, we are also going to take trades. We are also putting in trades, and we are trading. Okay. So now, euro this market is in a buying stage, and we are going to be a buyer on this currency. Okay, the next tool we are going to use is the PT zones Forex. So that one would give you an additional, but it's been computed with a different algorithms, and it gives you a different approach, and see whether it's giving you the same answer. So if you look at euro dollar here, so it has been up on the daily, up on the weekly, up on the monthly, quarterly, the previous, this is the previous, all these are previous time frame, meaning -1, and all these are current time frame and current time frame. So overall, I see all green. So that means euro, we should be only looking to go for a buy. So second tool tells me that I should be a buyer, and I'm going to be a buyer. Okay. So the next tool is we are going to use is, we call it a currency dashboard, and this is the most powerful tool in our system. This is, you can choose the different time frame you want and the crosses you want, and it gives you all the entry, exit, and stop loss level. Okay, now I'm going to give you in one sentence based on my dashboard, based on the trend map, and based on the PT zones, what I'm expecting and how I'm expecting the market to trade, and how I'm going to trade, and what I should be doing. Okay, so what we'll be doing is, okay, I'll be giving you the calls for another 10 to 15 minutes. So I'll be giving at least 3 instruments. Okay, if you can follow, then we'll see how the market responds, then we can go accordingly. Okay, now euro. Right now, this is the current price. Okay, this is the current price, is trading 108.90. Okay, what I do is I look at the current dashboard and the previous day dashboard. Then this would give me the directions and the strength of the market. Okay, this is, of course, we will be teaching you how we evaluate the strength and how we look at it and how we go about. Okay, when I look at this two dashboard, okay, I'm going to give you in one sentence, one sentence. Okay, you take down or you write it down, and then you see how the market responds when the news is out. Okay, I'm not expecting the euro dollar to go below 108.40 and 108.10. Okay, this is, I'm not expecting any the euro dollar to go below these levels, even if the data is good, or unless it comes out to be outstanding, then I wouldn't know. But if the data is good, I'm not expecting below 108.40 and 10, maybe I'll also write it down, 108.10 and 108.25. Okay, 108.25. So I've got 3 levels. So why I choose this level? Okay, always remember, when we are going for a buy, okay, we need to concentrate on the low, because we need to know what is our risk, what is going to be our reward, then how do we go about it. So on the other hand, when we're going for a sell, then we need to concentrate on the high. So now the question is 108.40, 108.25, and 108.10. Okay, I'm not expecting below this. Okay, now the next thing is we need to know what is our target. Then finally we go on our entry point, because then only we know that what is our risk, what is our reward, and how do we go about. So now what is my target? Based on yesterday's so-called dashboard and today's dashboard, as long as the price breaks 108, okay, you write it down, 108.90, which is where right now the market is trading. I expect the price to move towards 109.50, 109.75 and 1100 or max 11030. So these are my targets. Okay, I'll give you the targets, which is 109.50, 109.75, 1100 and 11030. Okay, I've given you 4 targets levels. Okay, now market is trading at 108.90. So I need to give you a entry point. So the entry point is I would be looking to buy. That means, see, always remember that we need to have 2 types of entry. One is, we call it a best entry, and one is the first entry. Okay, first entry means you want to be in the trade and you got to be in the trade, so you take an entry. So I'm going to give you 2 entries. That means what you can do is, maybe the first entry you enter with a small size. Then your best entry you try to enter a bigger size. Meaning, like for instance, if let's say your first entry you go on 50,000, so your best entry you can go with 100,000. Always like 1:2. So this is one way of doing things whereby we can make money. That means the rule of the game is, when we lose the minimum, and when we gain the maximum. At the same time, our risk reward also need to justify. Okay, now my first entry would be uh, either just 5 minutes before the market, whatever the market is trading. I may want to enter the market, or 5 pips or 10 pips below the market price. Okay, because remember, I don't know if you are trading in Forex, especially when the data is out, okay, there is a slippage. See, because we can't put in a stop buy, stop sell order because of the slippage. So the reason being, if let's say you put in a stop buy, you put in an order to buy, because of slippage, you might get a very bad fill, and eventually you end up making a very small profit, or a big loss. So we would rather take a minimum entry with close to the market, so we don't get into the slippage. So my first entry would be roughly 5 pips near the market. I'll tell you when we approaching, then I'll tell you, okay, I want to buy market and you can do. So we can do it together. Okay, now my comfortable entry would be buying at 10860 or 55. Okay, now let me double check that with lower time frame. Okay, I think the lower time frame also gives me the same answer. Okay, so now, okay, now I got an answer, right? So now I'm going to buy at, okay, I'll give you the call. I'm going to buy at 10860, stop at 10820, so which is a 40 pips risk, and my TP is 10940 and 10985. Okay, this is my call. Okay, I'm giving you the straight setup. You can test it out. You want to trade it. I mean, probably you want to put in a demo account, you do it and test it for yourself and see whether this thing works. Okay, I repeat. So this is, okay, I'm expecting the data to be bad. Okay, the condition is, I'm expecting the data to be bad. And if the data came out to be bad, and this is what I'm expecting, meaning I would want to go in for a buy at 10860 or better, but stop loss has to be at 108 so-called 820, and my TP is 10940 or 10980. Okay, then let's say I want to enter. Okay, I'll also give you this call. Let's say I want to enter at market, that means 5 minutes before the data is out. So we will be trying to enter at 10890, and for that we would put a stop below today's low, okay, which is 10860. Okay, 10860. So now 10860, maybe we put at 10855. So I have another call. I want to buy at 10860, sorry, 890, that is near the market, and put a stop at 10855. And the TP is still the same, 10940 and 10980. Okay, this is, we are expecting the data to be bad, and if the data comes out to be bad, and this is how I expect the market to move, and I'm going to manage the trade. Okay, now I'm going to give you another scenario whereby if the data is good, okay, what is going to happen is we are going to see a spike down. Okay, that means the trade we have taken, it may get stopped out. Okay, it may get stopped out. So in the event, if it gets stopped out, remember I told you, okay, what I'm expecting is overall the trend is still up. Okay, even the data is good, I expect the spike down and eventually to go up. But the only thing is the strength may not be as strong as the data is bad. So now the next call I'm giving you is, okay, let me write it down. The next call is if the data is bad. Okay, I put an order to buy at 10830, and this one I'll be going in for two lots. Okay, two lots. Okay, two lots, because the reason is I've already got stopped out. So now the next is, for that I'm going to put my stop at 10795. So that means I'll be losing about 35 pips. Then if the data is good, okay, I'm not expecting, because I'm expecting the market to be within a range trading. So that means I would want to exit before 109. Okay, 109. So that means what I'll be doing is I'll be putting in a trade, two lots at 10830, stop at 10795, and TP is now, right now is, I will exit at 10870 or 75. So that means only 40 pips. So that means in the event the data is good, okay, I'm going to be a very conservative trader, and I will exit with a hit and run, and I don't challenge the market. So overall is, I've given you for euro dollar what is to be expected and how we are going to trade this. Okay, now another thing what I wish to tell you is, today if the data is bad, okay, when I say bad means anything surprising or very bad, then we can expect a big move, right? So we are expecting a big move on the euro dollar, on the pound, on the dollar yen, and on the Aussie. Okay, how do I choose? Okay, again, yeah, I can share with you. It's all the tools what I use. Okay, so if you look at it, if you look at on the weekly, okay, the trend is strong on the euro, pound, dollar yen, and Aussie. And one more is dollar sing. Okay, dollar sing. So we can expect, that means if the market is really, if the data is really bad, we can expect all this thing to be in the direction of that movement. Okay, now one more thing is, okay, maybe let's talk about gold. Okay, gold also is one of my favorites. So what I'm going to do is, I'm going to give you a call on gold, I'm going to give you a call on euro, and I'm going to give you a call on dollar yen. Okay, so the gold, we look at it, you see here the difference between the gold and the currency is the monthly is also strong. So gold is expected to break higher, because the monthly strength is also supporting that view. Monthly is strong, weekly is strong, daily is flat, but yesterday was up, but today is red. That means that the duration that all this hourly is showing a sell. So overall, I think it's just looking for a correction which is happening. So if the data uh, is expected to If the if the data is bad, then we can expect big movement on gold as well. Okay. Now the same scenario, I'm going to give you what I'm doing or what I'm expecting. So here, uh, let me look at the PT zones Forex. Okay. So if you see here, the PT zone Forex, the daily is weak. Okay, daily is weak. Weekly, monthly, quarterly, all are up, all are great. So the reason being is because gold has got a big movement. That means the swings are pretty big. So that is the reason you can see. That means once the data is out, all this will become green and straight away it will turn, depending on the data again. So now the red here denotes chances are that gold, the high for the day may be seen. That means what is telling us is chances are it may be in a range with still a bullish bias, but I'll tell you which level it crosses, then it will become bullish. The one also I'll give you an answer. Okay, now this is the PT zones. Now we look at the dashboard. The dashboard, I'm going to give you in one sentence. Okay, write it down. And I also better write it down. Maybe next time I'll show you the screen as well. Okay. So now the gold right now is trading at 2403. So the previous day high was 2424 and previous day low was 2371. And right now it's trading at 2403 is somewhere here. And we have only one strong buying force and we have two selling forces. Okay, this is we read the dashboard, by looking at the number of forces. I'll be slowly guiding you, how we use it and how we take our trading decisions. So now I'm going to tell you. Okay, pay careful attention. Huh? The goal has to clear 10 half and 19 half. Then we can see 2328 and 2428 and 2431 or even higher. But the 10 half and 2419 half has to clear. Okay, then we look at the previous day. You see here, there is a strong support at 2391 and 2386 half. So in other words, I'm not expecting the gold price to go below 91 or 86 half for today, right? Even if the data is good, unless the sentiment changes, then it's a different scenario. But on the other hand, okay, I'm not expecting below 94, 91. Okay, and of course maximum is 23865. So you write down all these levels. Okay, 2394, 2391 and 2386 half. Okay, I'm not expecting the price to go below this level. And on the other hand, the 2410 half and 2419 half and 2424 has to break for the price to push higher to 2431 or even higher, which is 2443 or even 2450. And once it breaks 2450, the sentiment is entirely different. So this is the scenario for gold. Okay, now how are we going to trade? Okay, I'm going to give you the same scenario like what I've given for euro. Okay, I write it down. I'm expecting the data to be bad. Okay, so today's low is 2398 half, right? So I'm not expecting below 2398 half if the data is bad, and 2410 half has to break and 2419 half, that means 16 half or 19 half has to break for further strength. Okay, now the next thing is I've taken, remember earlier on I said I'm not today's low is 2398 half, and I remember I told you I'm not expecting below 2394 and 2391. Okay, maximum is 2386 half. Okay, now excuse me. So now I'm expecting the data to be bad, and I'm expecting this low to hold. If the market came out to be bad, then I expect this gold to spike, and this is what I'm expecting. Okay, so now what is the call I'm going to give you? One call is, see, we have another 10 minutes left. Okay, I don't know how long, whether I can give you one more tool or if not, we just stick to with this two tools. Okay, now what we can do is, okay, 5 minutes or 2 minutes. Okay, gold is a very volatile tool. 2 minutes before the data is out, excuse me, you try to buy at market and put a stop below 2397. Okay, then you see whether the 24105 breaks, 2416 half breaks, and 19 half breaks, and 2424 breaks, then eventually it will go up. But on the other hand, if let's say, okay, the first entry is buy at the market and put a stop below this. Let's say the market is, the data is good. Okay, we get a spike down. When get a spike down, I want to buy at 91. Okay, remember I told you 91 is a strong support. So I'll be putting another order buying at 2391, and my stop for that is 2385. So that is about $6 stop. And I for this, if the data is too good or the data is good, then I expect the spike down, then eventually come up and start to move higher. So when the news is out, I'm going to tell you, okay, look, okay, this is the data is good. Okay, we are expecting this, and we can wait for this market to move in this direction, right? So my second place order is I want to buy at 91, put a stop at 85 half, and for this I don't put any TP. Wait, or if you feel you want to put a TP, then you put it anywhere below 16 half, 10 or 18, because if you feel if you're a conservative trader. But on the other hand, if you're aggressive, then you see whether it breaks higher, right? So now, one, if the data is good, this is what we are going to do. So we have two types of entries. One is buying at 91, stop at 85. The other one is buying at near the market and put a stop below 95. So we can put one more entry if you really have guts. Then try to put near 99. Okay, 99. Okay, let me see your current time belt. Yeah. So you can put at 99, 99, and that one you put a stop below 94. So this is the third entry. So you can put in, and this one you got to exit before 2410. So this is provided, this the data is good or bad, we need to know that. Okay, so I've given you two calls. One is euro buying, one is gold buying. Okay, we have another 6 more minutes. Okay, let me quickly give you one more call. Okay, dollar yen. I don't have to explain the thing, but I'll just quickly give you a call. So at least we have three instruments to play with. Okay, just uh, give me 1 minute. Okay. Okay, the dollar yen actually is already coming off. Okay, it's already coming off before the news is out. Okay, just now I think we shorted at around 159. Okay, that uh, 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 we shorted at 159. We're already making about 40 pips before the news. Okay, now anyway, we what we need to do on the dollar yen is, okay, current high is 159.45. So I think we have already missed this move. So chances are, let me see whether I can give you a tighter level. Okay, I think we already missed that opportunity, you know. So the thing is, probably you want to put a sell at 159 and put a stop above 159.40 or 45, and TP is 157.50 below yesterday's low. Sorry, not below, above yesterday's low. So which is 157 half. Okay, I think it's 157 half yesterday's low. Yeah, correct. 157.40. So we close at we take a profit at 157 half, right? So you try to sell because we already missed it. So for those of you who are already into the trade, okay, what I would suggest is wait for the data. Then if you are making, I mean, if you already entered, you're making, then try to reduce your stop loss so at least we don't have to expose risk unnecessarily. Then we see whether the 15830 breaks, because the 15830 has to break. If it breaks, then we may see 157 half. And this would happen if the data is bad. Okay, the condition is if the data is bad. But on the other hand, if the data is good, we may get a spike towards 159.50 or even 159.70. Then eventually it will come down, but it should be in a range. Okay, it should be in a range. Okay, we have another 3 minutes. Okay, good luck to all these guys who are all those guys who are going to trade live with us, and we have taken the trade as well. And our admin, you know, please try to get the signals filled, you know, also that, and try to manage it. So now we have another 3 more minutes while we are waiting for the news. Okay, any questions or anything you want to ask related to the trading, I would be very happy to tell you. And if you really want any question, please address to everyone and type under the chat, so at least I can tell you how to look for this trade setup and how to trade, how to manage this trade. Okay, we have another 2 minutes. Okay, let me change my screen. I hope you can see my screen. Uh, let me. Okay, now good luck. Okay, we have 3 trades which we have given. Okay, right now the data is going to be out in another 1 minute 15 seconds. Okay, the countdown starts, and again, okay, the market is expecting 0.2 on the core PPI, and PPI month on month, okay, is expecting 0.1. Any negative figure from here, okay, we are going to get on the weakness on the dollar, spike on the gold, and this, if it's good, then chances are we may get on the other side, but eventually I think it should be moving in our favor. So I'm going to tell you, okay, of course, after the news is out, I'm going to tell you how we can handle this trade, how we can manage this trade. Okay, we have 20 over seconds. Okay, good luck, and we'll see how the market is responding. Okay, 3 seconds, 0. Okay, now the data will be out any moment. Okay, we see whether the data is good or bad. Okay, the data is good. Okay, you see, its data is good. Okay, in fact, the 94 and is too good. Honestly, it's too good. Okay. So now we are expecting the so-called the dollar strength is coming. Okay, dollar strength is coming, and yeah, we don't see. I mean, of course, it's too good. Remember, I told you. Okay, but last month this data was bad, so this month I think we are expecting to be good. But of course, the direction of the market is still on the upside. So now what is going to happen is, since the data is good, okay, what is going to happen is we should be getting a range trading after this. Okay, and of course we are not expecting to I think the gold is already dropping to 92. Okay, in fact, remember I told you 91 is the support. Okay, 91 is the support. So the 91 should hold. Okay, 91 should hold. Then the euro dollar. Okay, let me show that screen on the euro dollar. Okay, so let me change the screen so at least we can see. Okay, so uh, you see that gold is trading at 2393, and the euro dollar didn't drop much. Okay, and dollar yen also, I think it went to 159. Okay, 159. I think we have, I think I remember we told you that we want to sell at 159, right? So since the data is good, okay, then what we are expecting is, okay, most likely, yeah, we have at 10 o'clock, there's one more data that's coming in, right? So that data might be bad. Okay, if that data is bad, then we expect again the dollar weakness to come in. So as of now, the data is higher than forecast, and it's too good. So we might get a spike on the opposite directions, which we were prepared also. Okay, we were prepared. So I'm not sure. We tried to buy at 91 on the gold. Okay, this is not filled. So right now is 94. So we will just get the thing to settle down for a while. Then we can go for a buy again on the gold, right? But since the data is too good, and if the 10 o'clock data is bad, we expect the gold to move again higher. But even if let's say that data comes out to be really bad, sorry, really good, then today is going to be a range trading. That means gold is going to be within 2391, max 2386, but 91 to 2416 today's high. Okay, this is what is going to happen. Then euro is also going to be within that range. Then pound is also going to be all within that range, and this is what to be expected, right? So so I've given you okay, let me finish the slides, then okay, so again, good luck. Okay, I think today's data is good. Okay, now the services we provide, okay, we give you all live signals on 5 types, like as I said, scalping, day, news, momentum, and swing. And we have a live trading webinar. That means like what you have this experience. This is called a live trading webinar. That means we will be trading live with you and we will be guiding you how to go about it. We are also recruiting traders and we also train full-time traders. Okay, we also provide consultations for institutions, business owners, and fund managers. Okay, then of course you can trade live with us. All these are the services which we are now opening to public after so many years. And we also provide funding for traders through tie down with other companies, and we are providing market insight every day, what to be expected and how we can trade and the do's and don'ts. Okay, then of course trade managing updates and also the daily trend report. Okay, we also do a news trading live, YouTube live, which you're seeing. These are the tools. We also provide social trading, and these are the services which we provide. Okay, and we have a next webinar. This is on coming Tuesday. I think this is going to be a news live trading also. This is going to be on July 16th and next Thursday, July 18th, same time. So now what we have done is we have fixed the time. Okay, we have fixed the time to standard 7:45. So at least, if there is any news, then we can trade during the news and we can manage the trade. And any questions, okay, feel free to ask. Then after that, we can end the session, right? So any questions? Okay, if you have no questions, okay, thank you for coming into this room. And what I would suggest is, okay, because in future, I mean, if you really want to learn from us, if you really want to be as interactive as possible, please ask questions and please trade with us. So at least we can learn as a group and travel together, right? Okay, with that, I conclude today's session. Okay, good luck and have a great weekend. Okay, bye.